housing's your biggest expense. And so if you can get rid of that, you're going to set yourself up for achieving financial freedom way sooner by capturing your housing expense to reinvest. When people get interested in real estate investing, they often get talked out of it. I am currently sitting in my third house hack. House hacking with the VA loan is the single best way to get started in real estate. The amount you can save every month, the faster you'll achieve financial freedom.
This is your Real Estate Syndication Show. Today, our guest is David Pere. He has grown so quickly in this space and coming out of the Marines, 13 years of service. But those last 5 years while being a Marine, he went from zero to millionaire and never had to have a JOB after being in the service. I know it's going to be encouraging to you if you are thinking about getting into real estate in any form or fashion. He has grown a network as well that's allowed him to be very creative in a lot of different asset classes. It's been encouraging to see his success, and I know you are going to learn a lot from him today. David, welcome back to the show. Honored to have you on. It's been a while since we've caught up.
Yeah, it's been, like 3 years probably. It's good to see you, brother.
Yeah, you as well. As always, grateful for your service. Always grateful for our servicemen and women. So just want to thank you just right off the bat for your time in service, serving our country and being a Marine for 13 years. And we're going to dive into some of that today and the transition and how that's influenced you. I know it had a major influence, it still does, on my life and my family and my business. And just seems like everything, almost everything I do, the military helped me in a lot of ways. Let's jump in right there, maybe share a little bit about where you're at in your business, David, but also I want to jump into your military background and how that's influenced you, because I know that's a big part of your audience as well for your brand, and so I think a lot of people will relate to that.
Yeah, absolutely. So I joined the Marine Corps in 2008. I grew up in, I can't necessarily say Podunk, Arkansas, but we were not in city limits. So like I lived probably 5 or 10 minutes outside of Little Rock, but the town I had as my zip code was like, we have a post office and a stop sign. That was, I was homeschooled. My parents were very religious, very conservative. I had a fairly sheltered upbringing, and as all adventurous young men who live in a kind of a bubble, I wanted to see the world, and I didn't have any money to see the world, and I didn't pay enough attention in school to have scholarships to see the world, and I didn't like the idea of school anyway. So what better way to see the world than to let Uncle Sam pay for it? So I joined the Marine Corps. And that was the adventure of a lifetime. I told myself I'd do 4 years, get out and go to school. And then I fell in love with it. And so I reenlisted and I reenlisted and I reenlisted. And then I was probably 7 years into service that Buddy was trying to get me to sell Amway products with him. And he handed me the book Rich Dad, Poor Dad, which had the effect he did not want, where I was like, wow, Amway does not sound great. Real estate sounds awesome. Let me buy real estate. So I bought a duplex. I went and did a whole bunch of research, and I watched a lot of podcasts and listened to podcasts and found Bigger Pockets and read all their books. And I should preface that by reading, I mean listening, because I was lazy and did not like physical books. And, I bought a duplex. I lived in one half, rented the other half, and I was like, wow, that's pretty cool. And then when I got orders to my next duty station, and all of a sudden that was paying me about $200 a month at the time, it moved up to about $300 by the time I sold it. I was hooked. It's like, this is awesome, So I ended up doing 13 years in service, and that last 5.5, 6 years, I was able to go from basically a negative net worth or zero to, the word millionaire is such a buzzword now, but that was my net worth. But more importantly, I haven't had to take a job since I left the military. And that was all through real estate. And then over time, also building out a brand, helping others learn about real estate. Yeah, I was a logistics guy in the Marine Corps. I did a tour to Afghanistan. I got to drive around in big 6-wheel drive off-road trucks, shoot guns, blow stuff up. It was all the adventure you could ever want. And then
every little boy's dream right there.
Yeah, it was amazing. Then I got old. I had a kid, and I was like, maybe I shouldn't be so reckless anymore.
Awesome. Well, speak to managing this first real estate investment while being in the military as well. For those who are listening, what did that look like? Maybe some advice there to make that happen, because I think it's really attractive to think, oh wow, in 5 years, he went from nothing to a millionaire. And when he got out, he didn't have to go get a job, right? That's,
Yeah.
so give us some tips there, things that you did, or maybe even some things you wish you had done.
Well, I wish I'd gone bigger. I talked myself out of a fourplex and bought a duplex because I was like, well, if this doesn't work, I don't want to lose more money. And hindsight, had I bought that fourplex, it would have been even better. I mean, I ended up selling that duplex for double what I paid for it, and it cash flowed the entire time I owned it. Having gone bigger would have been a whole lot better. And it was, I bought it in 2015. And interestingly enough, every year I've been investing in real estate, people have been calling for the sky falling, the world's going to end in the real estate space. So I was kind of, I guess you could say, apprehensive about buying bigger. And boy, were they wrong. We've had a great run up the last 9 years. Now people are still calling for it, and I still don't know what to believe. So I wish I'd gone a little bigger. Interestingly enough, I tried to self-manage that first one, and I don't have that personality. The tenant could tell me 5 months in a row that their grandma died and they have a funeral, and I would probably buy it and be like, oh man, how many grandmas does this person have? Okay, fine. And so I ultimately ended up hiring a property manager. And people on the internet go back and forth because you're giving up 10%, or in my case, I got lucky 7% of your profit. But boy, has that been like the best decision I ever made, because realistically, I would cost myself more than 10%, and I would be stressed out unnecessarily dealing with this portfolio. And the perfect analogy for that is I had a property, and like every time the balls ended up in my court to do a repair or deal with a tenant or whatever, it's gotten just like procrastinated like nobody's business. And so, I learned very quickly. I was like, if I hire somebody and it's their problem, it's really easy to just send a text and be like, what's going on with this property? It's a whole lot harder to be like, I got to do this, I got to schedule that. Like, we had a property I had to take over the final repairs on, and it probably took 2.5 months to get the final inspection done, because every time something would come up, I would just push it off and be like, I'll deal with that next week, instead of just right away. And so I probably cost myself an entire month's worth of rent by, not doing it, which is way worse than 10%. So I guess I would tell people, just know yourself. Like, if you're a detailed person and you are okay with telling people, sorry, that stinks, you got to pay rent, then maybe you manage your own stuff.
Yeah, I couldn't agree more. I also self-managed a couple triplexes, some are our first purchase, and man, learned a lot the hard way. I still talk about the brain damage from that. Just
Yeah.
oh man, just the time lost as well, like the mental time lost, like just worrying about it and having to deal with the tenants. And I was like you, I wanted to help these people. And I remember sitting with one of the young ladies, and she brought her father to help sign for, I thought, okay, this is going to be good. I sat down with her on a number of occasions, like write out a budget for her. And okay, in 2 months, you're going to be able to be, ahead and all that. Of course, none of that ever worked. Just take advantage. But anyway,
Yep.
but a lot of good lessons learned, right? So
Yeah.
even to this day. But okay, so you bought that duplex. I think you house hacked as well, right?
I
You
did.
lived,
Yeah.
yeah. Is that something you would recommend now to somebody getting started, if they're, say, young enough or able to?
I am currently sitting in my third house hack. I absolutely love it. I think house hacking with the VA loan is the single best way to get started in real estate for any service member or vet. And if you're not a service member or vet, I would say the same thing with the FHA loan, or physician's loan, I guess, or USDA loan, or whatever way you can get into a house for as low down as possible. Because you get that 30-year fixed debt, and it's going to be a cheaper mortgage. It's going to be a more secure note, and you're going to get all the benefits of real estate. You'll get the cash flow, you'll get the tax advantages, the depreciation, you'll get the property going up in value, you'll get other people paying your note down, but simultaneously you're going to get to learn about real estate far more, I think, than if you didn't live on site, right? So it's like firsthand, you're getting to see, oh, hey, this, septic tank backed up, this stinks, this is a priority. Or, oh, the deck has a board loose, that's not really a priority, let's just tell them, hey, don't, here's some nails, we'll take it out of the rent, like, give me a receipt. And so you get to learn all of that, but it's a lot lower risk. I think the real reason I love it so much is, housing's your biggest expense. And so if you can get rid of that, you're going to set yourself up for achieving financial freedom way sooner by capturing your housing expense to reinvest. And then on top of that, what I've realized, and I'm sure you've seen this a ton in life, is when people get interested in real estate investing, they often get talked out of it, whether it's a family member or whatever. That's just like, I heard all these horror stories about real estate. It's bad. You're like, don't do it. Oh no, tenants, toilets, whatever. But for some reason, if you tell them you're buying a house to live in, everybody's like, good job, picket fence, American
American
dream.
dream. Yeah.
Yeah. And so it's like, well, if you can hack that to where people are supporting you in the idea of buying a house because you're living in it, but also you're going to live in it for free while you get to learn everything about real estate, like that'll get you past the analysis paralysis hump in what I think is the best way. And I mentioned right now I'm in my third. That's actually, I think, a lie right now because I shut the Airbnb down 3 weeks ago. But currently, the house I'm in, the downstairs is a walkout 2-1 basement. I've used it as my office for 3 years now. Out back, I have a tiny home that's like a little ADU. And when I got divorced last year, I moved into the ADU. And then the upstairs is a 3,000 square foot, 4 bed, 2.5 bath that I Airbnb'd. It slept 12 people. And so my all in expense on this house was probably 2,900, and I averaged between 35 and 5 grand a month in Airbnb revenue. And so it paid me to live in this bad boy. And I have done that 3 times now, all successfully, break even or cash flow. And I love it. The only reason I shut the Airbnb down on this one is just because after living here for a while, I got tired of dealing with, people would leave a review and be like, I didn't know that the owner lived there. And it's like, well, the listing says that, and so that just got old. And then I didn't like when there were guests. I felt like I didn't really want to use my backyard because I didn't want to, like, me and my kid out back playing catch when there's guests on the porch. So we'd like have to go to the park and so I was like, for convenience, I shut it down. But I'm also in a financial position now where I could make that decision. I could get roommates and make it still cash flow in a more convenient way. But currently it's just been whenever a friend's in town, I'm like, yo, crash in a bedroom. Cool. Thanks.
Yeah.
Like I'll probably end up hosting like an event here once a week or something, once a month or something to pay for it. But I got my porch back. I can do cigar nights now and I can run a local podcast out of this upstairs and it's been nice. But
Speak to the path now, duplex to where you're at now. What's your focus now and in real estate and how that's grown?
realistically, my focus right now is less asset class and more deal structure. And what I mean by that is like I've always been kind of a hodgepodge buy and hold. Like if I can hold on to the property and it'll make money, then I'll take it. But now it's much more of like I want to partner with really good operators who need something, whether it's introductions or capital and if I can bring that, then I get a piece of the pie for connecting. So some of the more recent examples, I got 10% of an RV park for bringing one person in to invest. My friend had found the deal. He needed the money to take it down. I had a friend looking to place that exact amount of money, put them together, and then I got through my team, I got the LLC created and I brought my lender to the deal. And so I backed the loan and brought in the private lender for the down or the partner for the down payment. And, I got 10% and I basically spent an hour on the deal. I got another one where we talked about it before. I got 35% of the deal on a 13 single family portfolio that we bought. And it was fairly reasonably priced out here in Missouri, but I had to raise 150,000 to take it down and provide the renovation budget. And then I signed on the note and I'm doing nothing else. And, when we're done, those properties will be worth probably 3 times what we paid for them. We'll pull most of the cash back out. We'll pay the lender off and I'll just get to cash flow, probably like $1,000 a month off, very minimal work. He'll make more money, but he'll do all the work. And another deal we did was, and this is if you asked me like specifically asset class, right now, I really love the boutique hotel side of the world. I own a small hotel locally, and honestly, that was a terrible experience because I didn't know what I was buying, and I bought the wrong thing in the wrong way with and so having to save that deal, and we ended up with a profitable exit that we're under contract on, and so it'll all be good. We'll end up making a good return. But the 2 or 3 years of struggling through management and systems and everything with that, I learned a lot about hotels. And then a buddy of mine got really good at buying properties in like vacation destinations where it's basically operated like an Airbnb at scale. And so I kind of make the same argument for boutique hotels that most syndicators make for apartments, where it's like, would you buy one house with a roof or would you buy 60 rooms with a roof, like the economies of scale? So this is the same idea. We bought a 130 key hotel with it's got a wedding venue, three pools, two hot tubs, and we're building in a gym. We're going to build in a restaurant into one of the extra places. And we bought it for 7.7. We're going to put 3 million into it. It should appraise around 14, and it'll cash flow, and it will have it for probably 8 to 10 years. And so we're kind of playing off the economies of scale with Airbnb. And the other perk is Airbnb is just there's constantly all these regulations getting dumped on you,
Yeah.
but each one of these is a commercially zoned hotel. And so the reason that regulations get stuck on Airbnb investors is to protect hotels. So we're pretty safeguarded about any of that. And yet we can list the rooms on Airbnb and VRBO and all the other platforms and benefit from it. So I really kind of like that asset class right now. But I mean, I'm in everything. Like if you were to ask me, like I've got a piece of the RV park, two apartments, another like 5 apartments that I helped raise for, 2 hotels, probably 20. Well, shoot, if you count the 13, probably 35 single family or duplexes.
Sounds like you have been able to be very creative, right? Like you have
Yes.
made a lot of connections and you've found people who have different desires, abilities, right? Things they're looking for. And you've been able to piece those together so to earn a piece of the pie, essentially, right?
Yeah.
And I love that it sounds like for you, it wasn't like, oh, well, there's a deal, but that's just not in my, that's not what I'm looking for. That's not in my the asset class I'm looking for, or whatever it may be, and just turned away from pivoted. It's like, well, wait a minute, I do know somebody that could help me make this happen, type of thing. Speak to maybe where that came from, or maybe even the network that you've grown to be able to do those things. How did you do that?
I would consider, like, if someone asked me what my superpower is, I would say it's networking. And I kind of stumbled into that. It's interesting because like I was homeschooled. Nobody really knows that about me when they know me because they're like, but you're so social and you know everybody. And not all homeschoolers meet the stereotype. I don't know what to tell you. I grew up working in a coffee shop. I went to a really big church, so I had a lot of connections there. And I think almost out of necessity in high school, I was like this. I was always trying to shake the stereotypes of like antisocial homeschoolers. So I was like, I'm going to know everybody. And that was kind of my, shtick in high school. And it probably died a little bit in the Marine Corps and then resurrected back when I became a recruiter. And it was like, oh, I have to network again. And then I just got good at it. And I just got good at remembering, like, I talked to somebody who does this thing. Like, there's not much that brings me more joy than connecting two people in a way where they just go and crush whatever, problem was there. And, maybe I get a text or not, but it's like, I know I helped solve that problem. Like, it's just fun. So I built this network, but I was also just documenting my journey on real estate through a online brand from military to millionaire. And that was literally just, hey, I learned this cool thing. Let me share it with the audience. And then they would ask questions. And when I got the same question a few times, I'd research that and write an article on it, make a podcast about it. And over time, I became known as like the guy who helped service members and vets achieve financial freedom. And that community started to grow. And then, yeah, it kind of, it happened accidentally. What happened, I was running a wholesale company for a little bit because I was dabbling in that. And we'd been marketing for probably like 5 months, hadn't landed a single deal, which is funny because I had wholesaled a few before accidentally. And that's what made me think, wow, this is easy. I should try this. And then as soon as I started putting money into marketing, it was like banging my head against the wall. No one wants to sell their house. I'm like, well, how in the world? Like, when I was just telling people, hey, if you have a deal, if you know someone who wants to sell a house, talk to me. I found a few. And now that I'm trying, it was weird. And then the week before Christmas, it would have been 2022, I think. The week before Christmas, over 48 hours, we signed 7 contracts. And all of a sudden I was like, I can't take down 7 deals. I don't know if we're going to be able to wholesale all 7 of these. I have the ability to flip 2 or 3, maybe. What do I do with this? So I sent out an email and I had a very small list I hadn't really been trying to build an email list. Biggest mistake you can make as a social media guy. but I kind of had a little bit of a list. I sent an email out and it was like a picture of all 7 properties. Underneath it was like purchase price if you want it, or if you want to lend on it, I'll give you these terms and here's the total amount I would need. Just email me if you got questions. I know I'm not going to be able to take all 7 of these down, but rather than like delete some of the contracts, maybe we can do something here. And by the end of that week, all 7, we had either I think we wholesaled 4 of them, and we ended up having the funds to lend on 3 of them. And it was kind of like, huh, that was cool. That worked. So the next time I landed the deal, I was like, instead of trying to wholesale it, let me email somebody. And it worked. And then it worked again. And then it worked again. And by the end of the year, I'd probably raised accidentally like $800,000 to do these flips. And I hadn't had to put a dollar into any of them. So I was able to keep marketing. And then somebody asked me, hey, I've been seeing your emails. Obviously, they're working. Do you think you'd be able to help me raise money for this deal? And I was like, I have no clue. Let's find out. And that didn't work great. I raised, I think, like 300,000 for the deal. But then when it really started gaining momentum was a friend of mine had an issue. He was closing a hotel. Everything was lined up, but they had like, it was like 28 days that they were going to need. I think it was like 675,000 in gap funds, and nobody would lend it to him. And in my head, I was like, I think I know a guy. So I texted a friend, and he was like, if you vouch for him, yes. And I mean, it wasn't cheap debt. It was like 4 points or 5 points or something like that. But he funded it 24 hours later, 48 hours later, something like that. And so then I was like, that's cool. I can, I got he gave me like a thank you. I think he gave me like a bottle of scotch or something as a thing. I was like, cool, whatever. But then I got to this point where I was like, I have probably 5 or 10 people that can, at the drop of a hat, fund between, $500,000 and $2.5 million to save a deal. Or, and it just kind of grew. It was a total, like I had no idea what I was doing. And then the funny thing is I started for the mastermind group. I brought in a bunch of capital raisers. I brought in, Matt Faircloth, Jay Scott. I always forget his name. He's like the guy everybody says is the king of raise masters, whatever that dude's name is.
Oh, Hunter Thompson.
Yeah, I'm not personally a huge fan of his. He and I had some communication issues on Instagram at one point, but he did come in and talk to the group, and so we're all good now. Like he totally made up for it, but I was not a fan, and I was like, he's gonna have to come to me and ask to be on my. My ego got in the way. My ego got hurt. But we had all those guys in, and like a couple others. So we get done with this. I probably had like 6 different presentations on capital raising, including like a panel. And I ran all 6 presentations through AI, and I took all the notes and I was like, draw me a summary. And then I did. And then I ran them back through AI. I did like 3 or 4 different things with this thing. And I came out with like this little like 1-page keys to capital raising. And basically, if you could sum up everything that every single one of those people said, it was like build an audience, have them trust you. When you have a deal, send it to them. That was it. Like I was like, this is so easy. I was like, I've been doing everything they said, and I didn't even know this was And so it just kind of came to. It was just this weird thing where I realized, hey, I know people, and so my friends now know if I have a deal that's got a problem, I can call Dave, and he can try to fix it for me. And there's always a piece of the puzzle there where it's like, do I get equity? Do I get a payment? Like, how are you? How's this? Like, I won't open my Rolodex for people for, because the problem with capital raising, and this is, as you well know, like I would never give up a private lender. I would never be like, oh yeah, these are my guys, like talk to them, because that's, whether you like it or not, that's me vouching for the person borrowing the money. And so if the person borrowing the money screws them, it's like, it looks bad on me. But if it's somebody I really trust as an operator and, they've got a problem that I know this can solve, I'm more than willing to help. And it's become a pretty lucrative, I've got equity in probably 7 deals that way. I've got a couple different, I guess you could say non-equity, like thank yous, like random, you can't, like, I can't get paid like a finder's fee for it, but I've had some pretty cool gifts just show up at my house. And I'm like, yeah, I don't know if that breaks the rules, but it wasn't related to the deal. So it's funny.
You talked about it was almost like by accident. You said, or it was by accident, but knowing what you know now, what do you wish you were doing then, right? Maybe to have maximized it even more, your network and whatnot.
Yeah, great question. I should have had a legitimate email provider and or CRM. So I was using MailChimp at the time, and MailChimp's okay, but you can't you can't segment your audience. And so I wish I'd had a way to just, when people joined, and I do this now, send them an email. It's like, hey, what are you interested in most? And if they click on investing, then they get tagged as an investor and they get sent a couple additional questions asking about, hey, are you sophisticated? Are you accredited? How much capital do you have? What kind of deals are you interested in? And so now I've probably got 1,600 people on my list that are, dedicated as interested in investing. I'd say probably 800 of them are accredited. And they haven't all invested with me, but at least I know. So now I'm like, all right, I can't get in trouble with the SEC if I email these people, but I can if I email these guys. Because the first time I went to raise capital, it was for a non-accredited, like a 506B or whatever, and they were like, the only rule is you have to know them personally, and you can't market it anywhere. You cannot email this to anybody who. And I was like, I can't rate, like, I have no idea what to do then. And it became like picking up the phone to call people because I had no way to segment that out. So I would say for anybody who's even thinking they may raise capital or need to raise capital, and I would say, look, if you're buying real estate, you need to learn how to raise capital on some level because
You need to be that focused on your network either way.
yeah, like one day you're going to come across a deal that's so good and you're going to say, if only I had the money. And the money's not the problem as long as you know people. And so I wish that I had just been from day one, created an email list where I had a way for people to say, hey, I'm interested in investing. It doesn't even have to be that. It could just be, I'd like to see what kind of deals you're doing. And then, if I'd done that sooner, I would have probably had 2 or 3 times as many people on that list by now, And then the other thing is just being genuine. I see a lot of people treat capital raising, it's funny. I don't go to a lot of like capital raising conferences because I've always joked they feel stuffy. Like if you go to a lot of these, it's like suit and tie, and I've raised this much money, and I'm like, cool. Where's the Corona? Like I don't care. I've just tried to be genuine and normal and myself. But what I've realized is I've seen it before where people they'll reach out to somebody, they'll ask questions, and because there's no immediate benefit to the person they're asking, they get kind of shunned or given like short answers. And then they come to me and they're like, hey, I tried to ask this guy this question. I didn't really get an answer. And I'll take like 2 or 3 minutes to just send a video or an audio message and just answer the question genuinely. What you never know is who has capital. So I've had a few different times where somebody who had been turned off by a large capital raiser because they just didn't have time to answer a quick question or just kind of pushed them off to somebody. I answer the question, and the next thing I know, the perfect example is a buddy of mine cut a $500,000 check into one of these deals. And I was like, you have what kind of money laying around? Like, we've been friends for 3 years. I didn't know you had any money. He's like, oh yeah, I used to work at this tech company and I had vested dude had like $1.8 million vested in stocks in his IRA or in his, self-directed IRA. And was like, yeah, I trust you. Here you go. And
You
I
built the
like
relationship.
had no idea that he had money. So I just tell everyone like focus on the relationship more than anything else and just be genuine. And you'd never know who has capital laying around. And what's funny is they may not. My parents just inherited a significant amount of money from two deceased relatives this year. Last year, they would not have had capital to invest in anything. And this year, they've invested in 2 deals with me. So you never know.
Yeah, the fewer assumptions you can make when you meet someone, the better, right? Just add value to them and care about the relationship. I think it's very wise. Quickly, because I get asked this all the time. You mentioned CRM. What CRM do you focus on now or use?
Currently, I use Go High Level because it's like an all-in-one platform. So it handles my emails and everything.
I've heard good things about it. I've not used it personally. Speak to how you are growing that now. You've learned the importance of the network, right? And things you wish you had done, and now you're doing those differently. But now that you know the importance of this network and growing it, how are you doing that? And continuing that growth.
Yeah, I mean, part of it is just nurturing the emails and the community. And part of it is really just focusing on growth of the like opening of the funnel, right? And so that for me looks like working on my Facebook group engagement, my Instagram content, my YouTube videos, and some of that is geared towards educating like, hey, these are opportunities, these are things like, If you're interested, let us know. But a vast majority of it is just answering questions and I would say just being yourself. So like my personal style in a lot of this is going and, for lack of a better word, talking smack to gurus online. So like people will send me a video and be like, this is crap. And I'm like, you're right. And then most people would just be like, that's it. And that's honestly helped me grow a lot because people see me as, and when I'm not tearing apart, but like poking holes in, the content of people that are just openly selling and you can tell. And so I go and I poke holes in it and then people come to me and they're like, well, how would you do it? And I'm like, oh, well, XYZ. If you want more information, like, here's my free book. And also if you want, like, you can just click this link and we'll send you opportunities if you want to check them out. And for some reason that has worked really well as people see me as like the guru hunter or whatever, which is not really the case. But when they see that content, for some reason, they're like, oh, Dave and I think the same way. I can trust him. And that's really all it is like, I would just say to anyone, the more people you can get in front of, however you choose to do that, and the more genuine you are so they can trust you. That's really all it is. Get in front of people, be trustable. And then once you actually have their money, once they invest with you, be a good steward. Like, don't lose it.
Very
I
important.
mean, that's pretty much it.
Yeah, no doubt about it. What's I guess, what's your focus now to continue the growth, or any plans, or even goals, for a year, 5 years from now for your community, that you're building?
On the community side, 10-year goal is to help 10,000 vets achieve financial freedom. Realistically, I just want to keep building to the place where like every service member and veteran knows that, within the military millionaire community, there's good financial advice. And it doesn't mean you have to pay me for stuff. You can just come and learn. I give my book away for free as a PDF. But when the time comes and you're ready to either invest in yourself for education or in another deal, like, we're here. And if it's not me as a good fit, like, I have no problem making introductions to somebody who would be a better fit.
What's you mentioned, some financial stuff, or like learning, just good financial habits, right? Or maybe mention some mistakes you see service members make that you're talking to often in the community, about trying to invest in real estate or even just general financial mistakes.
And biggest mistakes, in the military community, we always joke about like the Mustangs at high interest rates. But I think a lot of it is just not knowing where your money goes. If you don't know where your money goes, you're just kind of stuck. It's like, well, I have no idea where my money's going. I'm spending it here, I'm spending it there. Like, I would say track your expenses, know where your money goes, and then just genuinely be decent about, where it goes. Like, no, if you know where it goes, you'll see the patterns. Like, wow, I spend all my money on eating out. Maybe you should eat in for a little bit. Like, the basic, I think, mistakes are just spending more than you should. Like,
Yeah.
save. The larger the amount you can save every month, the faster you'll achieve financial freedom.
Yeah, I think it's wise. Most don't know where their money's going, right? Spending more than they're making, or credit cards, or whatever their noose is. Right. Speak to maybe what's the best way you're finding investors right now?
Honestly, I think the vast majority of people are from either Instagram or my Facebook community. And it's just people who've seen me. We probably get a lot from the podcast where they see and they get to know you. Like, I think long form content is way better for people getting to know you.
Yeah.
But just having those conversations on Instagram, you'd be amazed how many people come into the fold from that. The gentleman who I brought into the RV deal, he's someone I met on Instagram. So there's just a lot of, just being open to having genuine conversations online. I'd love to say there's something crazy I'm doing to raise money. Like, none of my in-person meetups has really resulted in. That's not true. Like, the ones I used to host in Hawaii and San Diego, some of those guys have invested, but yet to be seen if any of the people here locally, none of them have invested in anything yet.
I get to ask this all the time, I'm sure you do too, but what's your prediction for the next 6, 12 months, and how's that affecting what you're doing?
Oh yeah, real estate's going to go up and down, and people are going to freak out both ways. And no, I'm just kidding. Honestly, it's tough because there's plenty of things pointing towards a potential recession or a recession. Like, there's not really any signs yet. So it's like yeah, you can find things like the yield curve or whatever that all point traditionally towards it. But if you look at like the real estate market, everybody's looking at real estate to crash. I don't think real estate's going to be the block that makes the economy stumble this time. I think so many people have long-term fixed rate debt with incredible interest rates that they're going to stay put, or people will assume their mortgages. And I think that will prop the real estate economy from a massive crash. You know, everybody thinks that's what's coming, but that's not what caused '08. '08 was, you know, terrible banking practices. If anything, we've had the exact opposite. We've had incredible banking the last 5 years. I worry for some of the guys who are locked into big deals with interest only or floating, or with you know, short term fixed, and their rates are going to change. That will be something I'm really curious to see. But even that, I don't think is big enough or bad enough to tank the economy. Honestly, one of the things I was looking at for the longest time, and I don't know that I'd say this anymore, but for the longest time, I was thinking maybe the auto industry would be like the linchpin, because cars have, you know, doubled, tripled, quadrupled in price, and people are doing 7, 8 year debt on them now, and rates on those aren't great. And so there's a lot of people underwater, or, you know, biting off more than they can chew on their vehicle. I don't see a looming crash. I do think there's a pullback in place at some point. But it's interesting because you know, I would imagine come like September, we probably see a rate cut with the Fed, you know, pre-election. That kind of seems, you know, I'm not a conspiracy guy, but if I was trying to get votes, I think interest rates would be a good way to do that. I don't know. We'll see, but I don't see real estate in a position where it's going to crash yet.
What's your best advice for passive investors today?
Just know who you're going into deals with. And I would say knowing the operator is more important than knowing the market. Now, you should know all of the intricacies, but I think if you have a good operator, you know a good operator, you trust a good operator, you know, stick with them. I think there's unfortunately there are people out there, and I would say if you're vetting somebody you don't know, like ask people that have been in their prior deals. And I would try to find people that have been in their deals without asking them for references, because they're going to give you, because I have seen a couple people doing some kind of shady or having some deals go bad. I won't name the group, but there's a group that has reached out to me 2 or 3 times asking me to raise capital for them. And I know for a fact that they took a bankruptcy on one of their last deals, and they aren't disclosing that even to me when asking to raise. And when I ask questions about it, they give me real round. Just make sure you know who you're giving money to.
Even some simple Google searches can tell you a whole lot often, right? And I find most people don't take that time to even do that. But what's the big challenge you're facing in your business right now?
I mean, I guess deals, if I had to pick something on the real estate side, you know, you've mentioned it, like deal flow is kind of slow right now. The market's, you know, a lot of people have kind of hunkered down to hold and see what happens, which is fine. But a lot of people still think a lot of sellers still think it's 2021. And so, you know, like a commercial deal popped up downtown that I looked at and I was like, wow, the numbers work great. And then I realized the top 2 stories on it were gutted. And I was like, oh, okay, it's worth half of what you have it listed at, you know. And that seems to be like, I see a lot of hopeful high listing prices with people thinking that it's, you know, it's like,
What are some of the most important metrics that you track? Could be personally or professionally.
personally, I guess it would be like my sleep routine, gym, journaling every morning. Um, Business wise, I would say it's, you know, more just the CRM stuff, how the community is growing. To webinars a few times for building out the paid community, and so I'll track, you know, all the conversion metrics on that. That's probably the most detailed I get into stuff. I'm realizing that I've accidentally built a 7-figure business, and I should be a little bit more intentional about it. So,
What about some habits you're disciplined about, maybe that have produced a higher return for you?
journaling every morning, going to the gym has been huge. My sleep routine, I really struggle with that one. In the military, I always thought I was a morning person, but lately I'm like, I always want to stay up later. I always want to sleep in a little bit. Um, and then in the evenings, I'm incredibly productive. Starting to think maybe I should try to, you know, stay up later, sleep in a little bit and shake that up. But I've been really trying to dial in my sleep, because I can tell a very big difference in, you know, how that looks.
By getting enough sleep, you mean?
Yeah, if I sleep like normal, you know, and I mean, a lot's changed over the last couple of years. Like had all kinds of like medical issues that were, I really, what it was I basically was a zombie for like 6 weeks.
Yeah, sleep matters. My wife and I have a pretty big focus on sleep, or like being we're pretty structured about when we get in bed. I'm pretty structured, but morning being up early as well. But I gotta be very disciplined about getting in bed, right? So I get enough sleep to be able to get up early, and morning time is my best time. And David, grateful to have you on the show again today. And man, just your message speaking a lot to servicemen and women, of course, but I think to anybody really that wants to get into real estate. It just, man, you can do it. You can start with a duplex or fourplex and house hack and become a millionaire in a few years, right? I mean, even if you have
Absolutely.
another job or work, you don't even have to be doing it full time. And so I just think your story can speak volumes of encouragement to those who are trying to get started, or think like they have all the naysayers around them, like you talked about as well, that are saying, "Oh, it's too risky. Don't do that." So grateful for your willingness to share and be open and genuine, like you talked about, in how you've grown, your ability to raise money and network. I've been grateful to see your success as well and your growth in our industry, and grateful to know you. So, how can the listeners get in touch with you and learn more about you?
Yeah, the best way to do that is to go to thebestpodcastguest.com, and I've got a link to download my book for free there, and all my socials where you can connect.